Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1324th edition of Short-Term Trading Live with Oscar. Good evening, traders. I will try to make this video short and sweet. This video is coming to you on a Thursday night for trading Friday. That would be May 29th, 2015. All right, traders, there's a lot that I want to cover, but I will do it in a short amount of time. Just remember before we get moving here that futures trading is extremely risky and causes substantial financial loss. You should never trade without stops. Certainly don't trade without your risk capital. And I'm about to show you a pretty interesting technical opinion. So, right now we're looking at the Dow Jones Industrial Average, and this is likely for trading on Friday, maybe on Sunday through Monday, but let's talk about trading Friday. There are a lot of traders out there that don't know if the top is in. Maybe it is, maybe it isn't. They're calling for a possible downside. You've got other traders calling for a possible upside. I say that when we look at this chart, it basically just heads straight up, right? It starts over here on the lower quadrant of my screen over here, and it just races its way over time all the way up, but it goes in this direction. So no real question as to whether it's a big bull market, or if it was a bear market, of course it would be heading down this way. So we recognize that we're in a bull market, no question there. There are questions as to whether or not it's getting a little tired. And I say, if you look at how many times we can bounce off this average and rally back up, and it just continues to happen over and over, that we should believe in this average once again. And we just bounced off it a few bars ago, and we're hanging around it now. And it has worked for quite some time, right? So you've got that. You've got a nice parallel channel. It connects right down here at the lows and at the highs. So beautiful parallel channel on the way up. Then you've got this. Look at the direct center. Now you see where the average is, right? Holding well every time. Look at the direct center line of this parallel channel. It comes in right where we expect support. Do you see that? Right here. It falls right in the right spot, catches all the lows across here, just like the average does, and we're starting to bounce off of it. So I'd have to say the assessment of this chart right now is that it should continue to bounce off the average and off the line like it's been doing for a long time. So that's what I get when I look at this chart, but we've got others to look at, of course, so let's go examine some other charts. Next chart I'd like to show you is an interesting chart. Let's flip over to a metals chart for a moment, because I think you're going to find this one, I guess, interesting to say the least. We've been using this chart for some time now, so let's look at it. Here's your gold chart. We have rolled to August gold. That is the QEGCQ15. No longer are we trading the June, which was M. We are in August gold, okay? So be careful if you're going to place orders. Traders, the August gold, I've shown you, it's got this monstrous head and shoulders, right? You've seen this chart many times. I showed it to you in the June fashion. The August chart looks just the same. You've got a big left shoulder, a monster-sized head, a big right shoulder. You've got this huge average that cuts right across, stops it cold here, stops it cold here. Then you break out of the shoulder and you do what I call an Oscarism I've invented called the head test. You failed to get anywhere near the middle to the top of this head, of the head and shoulders, and turned into this bear flag, gets below the average and dumps like a bear flag is supposed to do. Bravo on that, and it worked really well, and we actually showed you this flag before the market dumped, and we were part of trying to catch this hold down move. So we're not backseat driving, very proactive. I showed you this before it materialized. So here we are. What are we doing with gold now? I am showing you the same thing. Watch this. This would be the pole of the flag. Drop the pole right there. Drop the flag right here, and you've got the same exact thing happening again. The next move should be just like this move, right? You built your flag. Next thing that happened was this, the drop. Now, that makes the flagpole. We built our flag. We should drop. Now, does that mean it's going to? Of course not, because you can never trade without stops, but it should work just like it did on the red one. Red flag worked, big breakdown. Now I'm showing it to you in blue, no difference in color, just illustration. Another flag, another breakdown expected. So the gold working really well. Let's move on now, and we'll head back to the U.S. indices. Traders, right here, E-mini S&P, you've seen this chart before. I showed you how it just bounces off my OTAP, or my Omni Trading Academy's average, and rallies up. Well, this, I believe, is a bull flag, and until it's proven to not be a bull flag, we will claim that it is. So if it is a bull flag, maybe today it wants to break out of that bull flag. If not, certainly there's nothing wrong with gyrating inside the flag and then eventually breaking out towards the upside, because that is what a bull flag generally represents. When you see a bull flag, you expect at some point a breakout. So we've got the bull flag until it becomes not a bull flag, right? Until this day comes along where we have to go, no, that was not a flag, and leave some lines across it. Then we'll deal with what's happening up here. So while it looks like a flag, we'll call it a flag. We'll see where it goes. Omni is a buyer of dips for trading on the onset of Friday. So we are going to start off with a buying of dips, okay? And let me write that for you. So we're going to buy the dips. We'll see how that pans out. Of course, we'll have stops in. And if buying the dips doesn't work, you never know. We could end up short, but I don't think that'll be the case. We will look to buy the dips for trading on Friday. Let's go look at another chart. This chart is the Nasdaq, also the daily bar, just like you've seen in the E-mini S&P daily bar. We rolled over to the Nasdaq daily bar. This looks pretty good. This red line represents all-time previous highs. So the all-time high was made here. I dropped the red line to show it to you. We are approaching it now. This basically is one big channel, or possibly one of my Oscarism F flags, because if you just go like this, and let's get that center line out of here now, it really doesn't make sense any longer. So if we just look at it like this, you've got the setup for the F flag. And if that's the case, then hey, we only had one time that we got underneath the F flag, which was right here. But it held at our average, went straight back up into the F flag. If that's the case, why not gyrate, hit the bottom of the F flag, go up and make new highs? So that's what we're expecting at the onset of trading. We'll see if it stays that way. Buying dips in the E-mini S&P and Nasdaq to start off the trading. One more chart that I think we should look at is the Dow Jones Transportation Average. Why? Look at that zonker. My goodness. That is ugly, right? It is not like the others. It is not cooperating. It is absolutely repricing itself, and so be it. But an interesting bit, a little interesting tidbit. Last time we did get through that average, we went about this far. And here we are about now. If it's going to gain legs, hopefully it'll start to gain its legs right here and now. Otherwise, you know, the transports are really starting to reel on, you know, this is a big bear flag, right? Let's break this down for just a moment. If you had to do something with this, you'd have to go, well, I'd have to call this a flagpole, and I would be, you know, there's nothing else you can call this but a flag. So that's a bear flag, that's a bearish signal, and down it did go. But I don't know that the tranny itself is as strong as all the other indices, which do not look terrible like this one. What I mean is the Dow Jones Industrial Average is a much, much richer, stronger, grander average, and that one doesn't look like it's going to fall apart anytime soon. That's the major average. That's the Dow. That's the one everybody follows. This is the Dow. So until the Dow looks ugly, I say we'll continue to buy the dips. Traders, thank you so much for watching this video. I hope these videos are helping to keep you in tune and in line with the markets and how to use these charts. Please come visit us at livewithoscar.com. And always remember, keep your emotions out of trading. One of the best things you can do to help yourselves with keeping your emotions at bay is to say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Traders, thank you so much, and I'll see you all at livewithoscar.com.